Sunday the 26th of January 2020. This is a run through of the Perseus Mining quarterly report for December 2019 quarter. Just a reminder, if you're looking at this page, this video is a free one that I'm putting up on YouTube, but a lot of the others that I'm now doing are going to be through the Patreon page that I've set up. So this is the page. So we've got about 80 people signed up at the moment, $6 a month, and I'm putting up content every week. A lot of response to sort of user questions and questions about different companies. So happy to do sort of these more videos, as I said, so that there'll still be some free YouTube content, but a lot of the content is now through the Patreon site as well. So that's weekly content, deeper dives into some of the stocks. This is a long video about my portfolio and my approach to investing in the gold mining space. So there's more and more of the content's going to be up on the Patreon page. So if you're interested in sort of the more the deeper dives, I'll be going into some of the quarterlies. I've already done a review of the Regis Resources quarterly report, and I'll do this Perseus one and a couple of others as well for some of the ASX gold miners that have reported so far for the December 19 quarter. So if you're interested, have a look at the Patreon page. There'll be a link in the notes to this video. So Perseus Mining, I think a very good quarter, probably one of their better ones recently. Almost above 69,000 ounces there. Sissingi sort of roughly in line with previous couple of quarters. Costs slightly above expectation, I think. Edikan is probably where they saw a higher production than expected. I think the market was probably expecting sort of 65 to sort of 67. I think would have been a fair number. So I think they've outperformed there, and you can see they were sort of toward the upper end of the guidance range as well. So 135,000 compares well to the top end of guidance of 140,000 ounces. And I think the key here is really this notional cash flow. They say notional because they're obviously doing the Aore project as well in Ivory Coast, and that's taking up a lot of their spend. So any free cash flow they get is really going toward that project. But they don't have a huge debt at the moment. You can see they've only got that $50 million drawn, and they've spent, I think it says in here, they've spent about 100 million on Yaouré already. So that project's going along quite well, and I think I'm just trying to find the note in here about it. Yeah, so you can see they've spent 99 million US on a 265 million budget, so they got 165 million left. And I think with the sort of cash flow they're getting, if you're looking at that sort of 30 million US dollars a quarter, that project's probably funded almost already without any more drawing on debt. I mean, I think they will draw a little bit more just for to balance their sort of cash and debt profile, but I think they're on their way to producing there. But at the start of next year, I think should be around where I think they're aiming for the December quarter as kind of a stretch target. But either way, that I guess the cash flow is really what's driven the share price higher here, and that's something that I look for. And I think what's happened here is the price has probably led the quarterlies a little bit, and you've seen this with a couple of the gold miners recently as well, that the prices have run ahead of quarterly reports rather than after, and I guess that's a change in how things have really happened in the last couple of years, and there's sort of a bullishness in the space. People are willing to kind of run ahead of these. But what that means is that sometimes the price has already factored in a decent result. And I think in the case of the Perseus quarterly, it was, didn't have a huge impact on the market. So it was released on the 16th there. So it's kind of, it's up a little bit, but it's still encountering a little bit of resistance here. It's obviously had a very good run. I think the market cap's about 1.3 billion Australian dollars at this point. Some of the other things in here that I think that the actual results from an operating perspective were there's not much really to talk about there. The grade, I think, at Edikan is still, it's still relatively low, but it did come up over the previous quarter back toward 1 gram a ton. So this mine is never, they're always going to be around this $1,000 with these sort of grades. So they're not going to be shooting the lights out, and I think that's going to be the story. If they can produce around this 45 to 50,000 ounces, that's going to be a relatively profitable gold mine at these gold prices. One thing they did talk about at Yaouré as well was some good drilling results. I thought they were pretty reasonable drilling results anyway. This Zanikan pit that is nearby the Zanikan project. You've got some reasonable hits in here, 26 meters, around 2 grams a ton, 20 meters, almost 2, 34 meters, 1.8 grams. So they're reasonable hits. And I think in the quarterly report, the CEO sort of talked about that. They're pretty confident that that's going to be able to add to the mining inventory for Sissingué. So that could add maybe another year to the life of the Sissingué project, which is sorely needed. That project is sort of short reserves. They need to do a few bolt-ons. And Edikan's in a similar position. I think they did do a couple of good presentations midway through last year, actually. I think these were probably to analysts at both Sissingué and Edikan. And there was you can see here the production profile. Just need to find the slide. Yeah, so that you can see here that the production profile kind of tapers off after this 2022. So I know they're talking at, they're pains to keep talking about this 500,000 ounces a year production, but I think there's the same problem at Sissingué as well, that after 2022, these mines sort of start to taper away. So they really need to add a few more ounces there. Otherwise, that 500,000 ounce number will be hit for about a year, and then it will start to fall away towards sort of 450. So they need to add a bit. And I think they've talked about Aswaja South, at Edikan, as well as another deposit they're trying to bring online. That has some issues. I think it's next to a village, so there's going to be a lot of costs associated with relocating people. This was a problem in earlier years for Sissingué, for Edikan, sorry. So while that's a positive, they want to bring some in, it's going to create a few problems, and there'll be obviously some capex work associated with that. I'm just trying to find so you can see in here, it's got 312,000 ounces of reserves there, but they previously didn't have it in the mine plan because of that proximity to this Ayanfuri village. So I think they were looking at going underground now as well. So the other thing they've done here is they've increased the gold price assumptions for Edikan and for Sissingué. So they've increased the gold price to $1,300 in their assumptions. Obviously, that's pretty favourable at the moment. We're at $1,550 or more. So that's I think that's a fair thing to do. Upgrade the price assumptions there to still well below the current gold price. So that probably buys them a little bit more time as well in extending this production life. But I think there's going to be an issue here that if the share price keeps increasing, I think the company they really need, and Yaouré doesn't have any problems with production and commissioning and that sort of thing. I think the company needs to start thinking about that next phase if they're going to buy a new project. They've sort of turned themselves into a little bit of a developer now with they had Sissingué developed, and then now they've had Yaouré. So whether they try and buy another African project, I think they've got to do it from a position of strength though. So you might see the share price, if the gold price keeps moving up, I expect the share price to keep moving pretty well here. I have been selling some of my shares sort of just for risk off purposes. I like to, I've been in this stock sort of with a lot of shares since the mid 40s, and I'd sort of bought again in this sort of period here. So I'd like to take a bit off the table. And I think the stock is relatively fully priced at the moment. Like I said, I think the price of the stock has kind of run ahead a little bit of the quarterly results, and now it's really reliant on the gold price to keep rising higher. So I don't tend to like to rely on the gold price for my stock picks. So while I think they're still in a pretty good position and probably the most stable position they've been in the last few years, I'm waiting for if there's a pullback here, I might jump back in again. But I think that gold price, it does look pretty strong. But I know there's often these the gold price tends to have these sort of fairly rapid pullbacks, and that might give you an opportunity. I mean, even in August to October, that pullback there was kind of, you saw a 30% fall in the share price. So if something similar happened again, I might be tempted to buy back a few shares. But I think, yeah, like I said, they need to look ahead a little bit. The market's probably at the moment still focused on current development EUA and stable production results. But I think in about another 6 to 9 months, there's kind of going to be that emphasis on, you know, what's your mine plans look like post 2022. I think they've said in the next couple of months they will update the mine plans, and that should extend the production profile. And they're going to do a lot more exploration as well around Edikan and Sissingué. So that, you know, that could extend mine lives, but I think it's going to be pretty marginal. So perhaps looking at a new project might be something they're after. I know I'm a shareholder in Cardinal. That's also in Ghana. You know, decent sized project, open pit. It probably suits Perseus pretty well. So I would have thought they're in a pretty good position there. You know, with the financial strength they have. They haven't been in this position of financial strength for some time. The other thing, obviously, is they could look at dividends. They haven't ever paid a dividend. So once they've, you know, almost finished ERA, I would have thought they'd be in a reasonable position to assess, you know, where they put that extra cash flow they're going to be getting, and I would expect that they'd be looking to be a dividend payer as well, but not for I wouldn't say for the next 6 to 9 months they're going to be a dividend payer, but I think once the certainty's there, I'm sure they'll look at paying a dividend to some sort of long suffering shareholders as well. So I think they've got a lot of development options, and they've got a bit of time, but the market's always looking ahead, and at some point they're going to start wondering about that production profile past 2022. So Perseus, a very good quarterly report, I thought. Probably one of the better ones, but as I said, the share price has run pretty strongly. So yeah, that's probably enough on Perseus. Some of the other videos I'll be uploading. As I said, I've done one on Regis. There'll be one on Resolute, Silver Lake, and St. Barbara as well. And next week, probably on some of the other quarterlies that are due to come out, I think Saracen and Northern Star. So stay tuned for those, and I'll see you next time. Thanks very much.